1% of 5 trillion is 50 billion. So 50 billion is 2 years of total silver production and recycling. So the silver market right now is a 1 billion ounce per year market. 850 million mined and about 150 million ounces recycled, round number 1 billion. Think about what happens when 2 years worth of total silver supply comes into the market. Where do you think the price of silver will go then?
David Morgan delves into the intriguing world of silver markets and explores the dynamics of the COMEX exchange. He discovers why silver is considered undervalued and its significance for both capital preservation and gains. David Morgan analyzes the registered category on COMEX and how it has been declining, leading to potential implications for silver traders and investors. Stay with us as we uncover the inside story of cash settlement and its impact on the physical silver supply.
Silver is a small market, it's undervalued, and it could be meaningful for capital preservation, let alone capital gains. The total registered, which is what the dealers have to play with on the COMEX, is somewhere around 30 million ounces. I don't know the exact number. It was at like 150 million ounces when the silver squeeze started. And so those several months, the registered category just come down, down, and down. And it hasn't been replenished very much. It got down to, I think, 27, and then 6 million ounces came in and moved it up to over 30, 33 or something. Again, I'm sure it's around that number now. The point is that COMEX is designed as a derivatives market. And that's really what it's designed for. I won't say only, although the CME would like it to be only derivatives. But they do have to back up their game with real stuff. And the real stuff is, of course, the real metal. And there is enough metal to meet the demand that the exchange allows every month or every delivery month. And you can take delivery on non-delivery months. So what I'm saying is that even though we're very tight, we still have enough supply currently to meet the demand. Now, there's an inside story on that. And that is that in the contract, you could cash settle. And that's at the discretion of either side. And so if someone that's a small player has 3 contracts for silver, so 15,000 ounces, and they submit through their broker, they want to take delivery. I've seen this happen. I don't want to make a big federal case out of it, but they just get a note back from the exchange or from their broker saying, you have to cash settle, here's your check. So we don't know how much of that goes on. Now, I don't think a lot of that goes on with industrial users. I think if you're Samsung or you're Mitsubishi or your Apple computer or whatever, and you're taking it off the exchange, which is doubtful that those entities are, but they could be. Wherever the demand is, it's coming off. But they may be negating all deliveries, as I just outlined. Is that important? Over time, it could be. What it does suggest is that they are being stingy with physical silver that they do have on allocating who gets it. And they have that right because of the contract.
David Morgan explores the rising demand for silver in solar technology and its potential implications for the future. He uncovers how silver is becoming a critical component in solar panels due to its unmatched efficiency. We will also learn about the latest advancements in solar panel technology that rely heavily on silver usage and why it's driving the global economy forward.
How much demand is there? And the demand has been very strong in retail until the summer. It's fallen off. A lot of the premiums have fallen back. There's not as much activity through most of the dealers in the country. Malls, frankly, may be different, but many of the wholesalers I talk to, they are stacking. They're getting more inventory. They've got to mark it down. They don't want to have the carrying costs that you have when you finance this stuff, so they're in a squeeze. On the industrial side, it just keeps looking brighter and brighter because the solar situation has been pushed harder and harder and faster throughout the global economy. And the new best techniques for solar panels actually use more silver per panel than less. And the reason, well, why would you use more? And the answer is because it's the most efficient. In other words, you want as many BTUs outputs or current output that you can get per panel for a given input. And so you actually input more silver, you're getting a much more robust output. And so the idea that we're going to continue to deplete the amount of silver per panel is not true anymore. And most of the panels that are being built with these two different technologies that are basically the same goal, making more efficiency, probably going to be about 80% of the panels built in this year So we've got a lot of industry demand. The retail demand will come back as the year continues.
David Morgan delves into the world of silver markets and investment demand. He discovers the significance of big players in the silver market and how their actions can impact prices. He analyzes the surge of investment in silver through ETPs and ETFs and its effects on the market's valuation. Stay with us as he explores why the small market of silver is undervalued and how it holds potential for capital preservation and gains.
I think the big player is, as Steve St. Angelo has said, it's what those big offtakes mean. So if you go back to, I think it was 2020, the best investment for, as far as he's concerned, for his fund was silver. And of course, the Bloomberg interviewers almost fell off their chairs when he said the word. Silver's not something to talk about at Davos very much. And in that year, there was like over 300 million ounces through the ETPs or ETFs as they're known. And I would contend that most of that, if not all of that, was Guggenheim buying in the silver market through an ETF. And that drove the price higher. But there are people out there, entities, everyone else that knows that silver is a small market, it's undervalued, and it could be meaningful for capital preservation, let alone capital gains. And this is the fact that I look at daily and think about almost obsessively, forgive me folks, but there's $5 trillion sitting on the sidelines. So that means there's a whole pile of fiat waiting to go somewhere. Does it go into real estate? Does it go into stocks? Does it go into bonds? Does it go into foreign exchange? Does it go into cryptocurrency? What does it do?
David Morgan explores the potential impact of the ongoing financial crisis on silver prices. He analyzes the significant amount of money waiting to be invested in various assets. David Morgan discovers why a portion of this massive capital is likely to find its way into the silver market, potentially reshaping its dynamics. He also discusses how the silver supply might be affected due to depleting mines, falling grades, and resource wars.
1% of 5 trillion is 50 billion. So 50 billion is 2 years of total silver production and recycling. So the silver market right now is a 1 billion ounce per year market. 850 million mined and about 150 million ounces recycled, round number 1 billion. And it's probably not going to get much above that based on how these mines are depleting, how the grade is falling off, how energy costs are still going up. I know they're flat now, but they'll continue to go up longer term. And also the resource wars that we're already starting to see, where if this lithium is in my country, it's my lithium, that kind of thing. You're going to see more and more of that. So if we take that premise of the 5 trillion and 1% being 50 billion, if you think in this next go around with the financial crisis that we are in, but will accelerate, that 1% of that money doesn't go to the silver market, then maybe I'm sending you on a fool's errand. I think it's almost guaranteed that at least that much money will come. Think about what happens when 2 years worth of total silver supply comes into the market. Where do you think the price of silver will go then? I'm talking about investment demand. I'm talking about what most people that aren't sociopaths or psychopaths look at money as a means of freedom and a means of security. Primarily security, because most people live with it. I don't know, most people live within their means. Most people do what they do, but money to them is a means to be secure. If you've got enough money in the bank and you need a car to be repaired, you can. You've got some emergency that comes up, you got savings, you can do it. And that's security. And that's what most people want. But when you got everything sitting in, let's say, a non-investment category, as I just outlined, most of that money, not all of it, some of it will want to stay in cash, but a lot of it's looking for a return or something safe. And in today's environment, as these things are occurring with the BRICS, and where do I go?